But not Bitcoin. I mean, I believe in it. I think I feel like I need it to stabilize.
As Bitcoin reaches new heights, the question of how far up we will go this cycle takes up our attention again. Over the past few weeks, leading analysts have increased their forecasts as we witness an intensifying bullish market sentiment. Today, we're going to dissect some of the most bullish calls to see how convincing their points truly are and whether all these dreamy targets can be wrapped up into one big top signal. My name is Stan, and if you're holding Bitcoin, this video is exactly for you. Before we head into the price predictions, I want to begin with some market context on which to base our analysis. On May 21st, Bitcoin shot up to just below $111,000 as it broke its previous all-time high of $109,588 of January 20th, the day Donald Trump became the 47th US president. On May 22nd, King Bitcoin elevated even higher to almost $112,000. During the time of shooting this video, it wasn't that long ago when we would be grieving over the bleak Q1. 1 week into Q2, the bottom was in, and since then, we've been on an upward trajectory, especially Bitcoin. Let's rewind a bit to April, when the peak of the US-China trade war prompted the price of Bitcoin to form a local bottom close to $74,500. Ever since, the chart has looked like nothing but a stairway to heaven, and we're all hoping this won't turn into a highway to hell in the blink of an eye too. Reality is, Bitcoin rallied over 50% in the span of just 6 weeks and totally outpaced the underwhelming recovery of the altcoins, as those on the sidelines have been watching in utter disbelief. Although some alts rallied from the April lows, in mid-June, not many of them have approached new all-time highs. Two of the top ones, Ethereum and Solana, are still far from their January highs, even though both saw almost 100% gains recently. Ethereum particularly hasn't seen a new all-time high since 2021. Vitalik, bro, come on, do something. And you clearly understand what that signifies for the crypto market as a whole. The dominance of King Bitcoin is ever growing. There has been some exhaustion at times, yep, but pretty much since August 2022, it's been climbing. I remember back in November last year, 2024, when altcoins got a chance to catch up a bit as the Bitcoin dominance shrunk to just under 5%. The alt party was over within just a few weeks, however. Bitcoin came back stronger than ever, and the rate at which its dominance has been increasing is plain ridiculous. Just last month, May 2024, the Bitcoin dominance reached a fantastic 65%, a level unseen since 2021. Here's some historic context for you. Back in January 2021, the Bitcoin dominance climbed to the eye-watering 74%. But then, probably inspired by all the healthy lifestyle gurus on Instagram, Bitcoin dominance took an ice shower, and by the end of April, it was under 40%. As Bitcoin was struggling with hypothermia, the altcoins were all caliente, and within a few weeks, their prices shot up by multiple X's. Anyway, that previous alt season is not the focus of today's video, but in case you want to position yourself right for the next one, then I encourage you to check out some of the Web3 projects that my team and I researched over at airdrops.com, the website. And I'm telling you, some of these will airdrop you tokens that could be amongst the top gainers during the upcoming alt season. Back to the topic at hand now. I think those of us who pay attention to the Bitcoin dominance will certainly be watching the region under 60% to 70%. Who knows, one day we might even see this level being support, and from then on, 100% won't seem so distant anymore. Let's wait and see. Ultimately, Bitcoin's flexing some proper muscles, and we cannot help but start wondering again, how far up could it go? Have we hit the top this time around? Or is this the new price floor? Admittedly, that last one might sound a bit outlandish, but consider what happened when Bitcoin cleared $10,000 in late 2020. It climbed fivefold over the next 7 months, and we never looked below $10,000 again. That presents an intriguing parallel to our current position, now comfortably above $100,000. However, Today's market structure is radically different from the accumulation phase that set the stage for the 2020-2021 rally. Bitcoin has been on an upward march for the past 2.5 years. It's gained roughly 623% from the near 15,000 low that we reached in late 2022. So, how much further fuel does this rally have? Well, depending on which data you consult, there appears to be plenty. Remarkably, on the Deribit options exchange, the most popular quarterly expiry bet is a call option expiring June 27th with a $300,000 strike price. For those unfamiliar, buying a call means wagering that Bitcoin's price will exceed $300,000 by the expiration date. Indeed, this June, traders are staking considerable sums on the belief that Bitcoin will triple within 3 weeks, lifting its market cap to about $6 trillion, nearly double Microsoft's current valuation. CoinDesk appropriately compared this wager to a lottery ticket because no clear macroeconomic or technical indicators support such a dramatic move. Will Bitcoin ever reach $300,000? Absolutely. I think it will. In fact, many of us believe it could happen sooner rather than later. Among them are fans of the Elliott wave theory who argue we're entering the fifth and final extension of a potential supercycle that began in the 2010s. In those circles, forecasting Bitcoin above $200,000 or even $300,000 by the end of this cycle is not controversial. But expecting that milestone in just 3 weeks? Now, that is unprecedented. So, what's happening over on Deribit? Either these options traders have some information we lack, someone is intentionally stirring up FOMO by conspicuously snapping up calls with sky-high strike levels, or, more plausibly, participants are simply caught up in the bull market's excitement and treating it like a gamble. Marcus Thielen, founder of 10x Research, believes the options market is signaling an imminent top. I quote, "Bitcoin skew, measuring the difference in implied volatility between puts and calls, has dropped to nearly minus 10%, indicating calls are pricing in significantly more volatility than puts." And he continues, "This suggests traders are aggressively chasing upside rather than hedging downside risk. In our experience, such extreme skew levels often reflect peak bullish sentiment, a classic contrarian signal." End quote. This rings all too familiar. Bull markets tend to crest precisely when everyone is convinced their targets aren't nearly high enough. It brings to mind that Citi analyst who in November 2020 predicted Bitcoin would reach $318,000 by the end of 2022. Yet Bitcoin never came close, instead closing that year around $16,500. But it's just $300,000, so let's not make a big deal out of it. On the flip side, does a bit of the over-the-top behavior in the options market signal that this cycle is nearing its end? Personally, I doubt it. Likewise, analysts upping their forecasts isn't automatically a sign of irrational exuberance. Adjusting targets to incorporate the most recent data makes perfect sense, just what we've observed as leading bulls boost their price calls. That raises a key issue. What foundation underpins their forecasts? Are their arguments compelling? And crucially, might they profit if sensational predictions drive FOMO and more buying? In most cases, the answer is yes. Yet, that doesn't necessarily imply malice or sloppy analysis in their methodology. Moreover, with sufficient FOMO-fueled inflows, even the wildest predictions can become self-fulfilling. However, when ultra-wealthy players are behind lofty price targets, it pays to consider their motives and discount those numbers accordingly. With that in mind, it's time to examine some concrete forecasts. We start with Standard Chartered, where its digital asset research lead, Jeff Kendrick, has floated a bullish but now widespread $200,000 target for late 2025. For reference, Standard Chartered is a massive 19th century founded retail bank that managed roughly $850 billion in assets as of last year's close. Established institutions like this typically lean conservative, so I would say there's a strategic undercurrent behind Kendrick's predictions. Back in 2023, he forecast Bitcoin at $120,000 for 2024. When that didn't materialize, Bitcoin peaked just above $108,000 in December. It proved only about an 11% miss. While an 11% shortfall may seem significant from one angle, it's modest compared to some past whiffs. Take that infamous City analyst, for instance. In April, Kendrick pushed the 120,000 goal into Q2 2025. As of this video's recording, that's only about a month out and about 7 percentage points shy of Bitcoin's fresh high, well within reach. Yet, in May, he upped the ante and came out with a prediction of $200,000 for this year. His long-term target for 2028 or 2029 is a whopping $500,000. He makes the case that whale accumulation alongside strategic reallocation away from US assets will be key catalysts driving Bitcoin toward $200,000 by year end. The idea of established institutions de-risking from US treasuries by buying Bitcoin would have sounded far-fetched just 2 or 3 years ago, yet many argue it's already unfolding. Additionally, Kendrick asserts the market is now all about flows, and those flows are manifesting in various forms. He has a point though. ETF inflows and institutional adoption are materializing more rapidly than most bullish observers anticipated. According to crypto asset manager CoinShares and other sources, US spot Bitcoin ETFs have closed May with the third largest monthly inflows on record, above roughly $5.5 billion. Remarkably, $2.5 billion of that sum arrived in a single week, accounting for about 25% of ETF inflows this year, which is astonishing when you consider it. Kendrick also highlights inflows from the Abu Dhabi Sovereign Wealth Fund into BlackRock's IBIT Bitcoin ETF and from the Swiss National Bank into Michael Saylor's strategy shares. Naturally, snapping up IBIT or MSTR stock is effectively funneling capital back to BlackRock or Saylor so they can buy more Bitcoin. Meanwhile, strategy has amassed over 580,000 Bitcoin, roughly 3% of the entire supply. Those acquisitions have eased off in recent months, reportedly as more companies adopt the same approach. New data from K33 research shows over 70 publicly traded firms have now joined the corporate Bitcoin accumulation race. Saylor's dominance may seem unassailable today, yet a fresh corporate Bitcoin treasury announcement emerges almost every week, eager to challenge his lead. Among the latest entrants are GameStop, which invested $500 million to acquire 4,710 Bitcoin. 21Co, a joint venture between Tether, SoftBank, and Canoo, and Nakamoto, founded by Trump's crypto advisor David Bailey. And we can't forget to mention Trump Media and Technology Group. These newcomers slot alongside Meta Planet, Semler Scientific, and Cooler Technology Group as both followers and challengers of Saylor's playbook. While this ramped-up competition might spell trouble for Saylor, it's hugely positive for Bitcoin's price. Firms are springing up everywhere solely to accumulate and hold Bitcoin, now trading north of $100,000 per coin. Saylor's model is famously price elastic. Acquiring more Bitcoin at elevated prices is by design, not an oversight. Moving on, Bitwise has maintained its 2025 target of $200,000 from last December and has set an even loftier goal of $1 million by 2029. Similar to Standard Chartered, Bitwise's outlook hinges on steady institutional fund flows and escalating sovereign credit risk. CEO Hunter Horsley sees this year as Bitcoin's watershed moment as a core macro asset driven by a US regulatory overhaul that's unlocking vast institutional investment. He sees a scenario in which asset managers controlling between $30 and $60 trillion allocate a mere 1% of their portfolios to Bitcoin. Although that seems modest, it would channel hundreds of billions into Bitcoin. Meanwhile, Bitwise's European research head, Andrei Dragos, adopts a global stance on sovereign debt as a key growth driver for Bitcoin. He points to a valuation model that prices Bitcoin according to the default probability of a basket of G20 sovereign bonds, which already suggests Bitcoin is worth over $200,000. Unsurprisingly, the US leads the pack when it comes to staggering levels of government debt. Debt is accelerating further, and Washington is almost certain to keep printing money to service current obligations and issue fresh debt just to stay afloat. That will erode the dollar's value, and since Bitcoin trades primarily in USD, That spells good news for holders. Bitwise's Chief Investment Officer, Matt Hoogan, sums it up neatly. Dollar down equals Bitcoin up. At the time of this recording, the US dollar index has slipped about 11% year to date. The drop has been fueled by the White House, which appears intent on eroding the dollar's reserve currency standing. In an April blog post, Hoogan highlighted that the Trump administration's trade agenda calls for a weaker greenback, even if it means relinquishing its role as the world's reserve currency. He points to a speech by Steve Miran, chair of Trump's White House Council of Economic Advisors, which blamed the dollar's reserve status for, I quote, persistent currency distortions and unsustainable trade deficits that have decimated US manufacturing. Yet, it's Horsley who lays out the broader thesis with the greater clarity. He envisions Bitcoin rising as a digital substitute for the US dollar and treasuries, driving its market cap to $50 trillion. He hasn't set a timetable for this outcome, but it equates to roughly $2.4 million per coin. By the way, Cathie Wood's ARK Invest has just raised its 2030 Bitcoin bull case from $1.5 million to $2.4 million. This forecast implies a 58% compound annual growth rate over the next 5 years, assuming 60% of funds currently in gold flow into Bitcoin, alongside $13 trillion in spot Bitcoin ETF inflows by 2030. For perspective, since the debut of spot Bitcoin ETFs in January 2024, total inflows have reached about $134 billion, roughly 1% of that 13 trillion figure. ARK and its founder, Cathie Wood, are renowned for their unwaveringly bullish outlook, once again hinging on a parabolic adoption curve expected to unfold soon. They do have some track record though. In 2021, they predicted Bitcoin would hit $500,000 by 2026. A bold call that could, much like that infamous city forecast, miss the mark if a bear market emerges first. Next up is another heavyweight in crypto, Arthur Hayes, the BitMEX founder, pioneer of perpetual futures, and now Chief Investment Officer at Maelstrom. In April blog post, Hayes forecast that Bitcoin could reach $250,000 by year end, provided the Federal Reserve swings back to quantitative easing. That means money printing. As he put it, Bitcoin trades solely based on the market expectation for the future supply of fiat. He argues the Fed is already in the midst of that pivot. On April 1st, Fed Chair Jerome Powell signaled a slowdown in Treasury runoff from $25 billion to $5 billion per month, while keeping the $35 billion cap on mortgage-backed securities unchanged. Crucially, he added that any extra principal payments from those mortgage-backed securities may be reinvested into treasuries. Hayes interprets this as the Fed mathematically holding its balance sheet steady while simultaneously printing money through treasury mechanisms. His verdict? Bitcoin will rocket upward once this is officially confirmed. We wouldn't complain if it came to pass, although a $250,000 price target is undeniably ambitious. That forecast is echoed by Robert Kiyosaki though, the best-selling personal finance author, entrepreneur, and longtime Bitcoin advocate. His projection rests on what he terms the impending collapse of the Marxist central bank system, a label that describes this fundamental pillar of central planning quite nicely. And yeah, I know I'll take some heat for saying that. Anyways, the system is crashing, many going bankrupt, Kiyosaki says, continuing, "Keep hodling. I'm buying more Bitcoin. I predict Bitcoin climbs to 250,000 this year. Buy more, do not sell. Open your eyes and open your mind and listen to people like RuPaul, Michael Saylor, Anthony Pompliano, and many others." End quote. It calls to mind the peak of the 2021 rally when Michael Saylor urged followers to mortgage their homes to buy more Bitcoin and hold it at all costs. What ensued? Bitcoin plunged from $69,000 to $15,000 over the following 12 months. Speaking of the top signals that we missed the last time around, my next video that I'll be putting together for you is precisely on this topic, looking forward. The top signals that may be evading you and that the mainstream conveniently doesn't show you. You're gonna love it, so make sure you don't miss it by subscribing to the airdrops.com channel right now. Now, what's one lesson here? Think carefully about whose viewpoint you accept and whose advice you heed. We can't really know what's happening with Bitcoin by the end of the year. What we do know, however, is that risk management is your only lifeline in crypto. As prices climb and as the market buzz grows, that's exactly when FOMO can wreak havoc on your portfolio. For that reason, you've got to stay vigilant, guys. If you want to avoid getting wrecked in this crypto market and not repeat my mistakes, for example, here's an honest conversation of mine on what sunk me back in 2021 and how I managed to recover from going down to zero. Go and take a look. I'll see you.